Good morning, everybody. It's Jim Johnson here, the head coach at Contractor Coach Pro, and welcome to another edition of the Contractors Training Room. And we're going to be talking about financing for the win today. We have a couple of special guests with us, John Geary and Paul Jameson from Constant Energy Capital. They're waving at you there. Paul Jameson is the Chief Strategy Officer. And then we have John, who is the Vice President of Sales Strategy. Is that correct, John? Have that correct? The right?
Yeah, Vice President of Strategic Accounts.
Vice President. So everything has to do with strategy, which is we talk about.
Yeah, kind of the face of the company, I guess.
Yeah, we're all about strategy. Everybody asks us what we do all the time. We actually coach and teach business strategy, so that aligns very well. It's all about strategy, and we like to help contractors play chess, not checkers. And so that's why we brought you guys on today. We want to help them with their understanding of what finance is and what financing for our customers is. And one of the things I realized early on is that I was scared of financing. So maybe we can get over some of that fear today. But before we do that, let's get to know you guys a little bit better. Paul, tell us a little bit about yourself and why you're involved in this financing thing and what you're doing with Constant Energy Capital.
Sure. So my role here at the company, I oversee coming up with our products. It really is in part listening to John and his conversations with all the contractors that we support about how we can best help them better deliver value to their customers. We came to this business. I personally spent a lot of my career in the energy space, financing power plants, a lot of rooftop solar projects, actually. And so I come from the other side of the table. My job back then was to make sure we had the funding to complete the projects before they were done. So we are a group of folks that come from the energy space and the banking world, and we really built this business to support the contractors first. So our entire platform is meant to be, we saw this as an opportunity to support the contractors and build financing around them and their needs. So that's what I do here at the company, and on my weekends I like to hike, golf, and occasionally I'll grill, but right now it's a little cold up here, but normally summertime barbecue, wonderful.
Awesome. So Paul, the guys that were on a little bit earlier got to hear this, but who's your favorite golfer?
So I have to do my different vintages. When I fell in love with golf, Freddie Couples, my favorite golfer. And now personal favorite, Rory McIlroy. So those are just two, Jim, you and I were chatting, but they're just both Americana golfers, the guys you want to root for.
And kind of that just good guys, right? Is that the reason why?
Exactly.
Yeah. Okay, cool. And so now we've got John over there, and I got to hang out with John for an evening. It was great. And we had something we had never had before. And don't think bad of us, because it's not what you think it is whenever I say it, but we had this thing called a whiskey cake, right? Like this whiskey. What did you think of the whiskey cake, John?
That was unbelievable. It blew my hair back. It was a treat I've never had before. It was delicious.
So tell us a little bit about what you do there and what your role is with Constant Energy.
Yeah, you bet. So as I mentioned, I'm VP of Strategic Accounts. What that means is, I'm out there on the road, meeting with contractors, dealers, manufacturers, and listening to their stories and trying to help them, increase overall sales and project size. As head of sales, I've had a great opportunity to talk to a lot of these different contractors. And what really drew me into Constant Energy itself, I come from a background of financial services, and when this opportunity presented itself to me, most of the experience I had with finance, in my personal world, it's not an industry that really intrigued me. But when I heard the story about Constant Energy Capital, I was like, geez, you know what? I can take my background and do something with it that is actually a positive, right, for the group that I'm going to be talking to. And that is a truly responsible lending platform that can help people grow their businesses. And these are businesses they're real people, right? These aren't corporate, Fortune 500 companies that are, these are people with families and lives, and they're trying to do good. So it was a great fit for me.
Awesome. Cool. We do have quite a few people on here. It looks like everybody's here. We got 27 attendees. So welcome aboard, everybody, to this Contractors Training Room edition for Financing for the Win. Now, how long has Constant Energy Capital been around?
So we founded the company in 2015.
So wow, just 4 years. So what makes you go, hey, I want to step into this financing world, especially when there's all these other finance companies that are out there and these choices for contractors? You go, hey, this is a great idea. Let's go start our own financing company.
Thank you, Jim. So we saw an opportunity to fill a void. People had options. We just thought that, frankly, we could build a better mousetrap. The incentives could be better aligned between a lending partner, a contractor, and their customer versus what was out there today. And that's from the products that were being offered to the process that everyone had to go through, and ultimately just the experience that they have in this and the relationship between those three parties. So we saw that, frankly, a lot of the financing was taken from other places and put in the laps of contractors to figure out, and we wanted to start that, rip it apart and say, let's put the contractor first and let's build a product around them.
Okay, cool. So why should a contractor even consider financing in the first place? I was a contractor for many years and did it in both venues, both insurance restoration and retail. And I just kind of expected those homeowners, like if they're planning on getting a new roof or some new siding or gutters or whatever, like you should have the money to do that. So why would somebody even consider financing in the first place?
Yeah, I think you can start by just looking at the statistics that are out there. What we've seen in our experience is an increase of at least 20% in project size across our contractors, and an increase of overall annual sales of 40%. So just looking at the basic numbers, numbers don't lie, and I think that would be the number one reason. You want to elaborate?
Yeah, it's another, especially for the roofing contractor industry in particular. There's plenty of information out there. A recent study from the Joint Center for Housing Studies at Harvard showed that projects, the larger they go, the more are financed. And in fact, the majority, more than half, are financed of projects that are in that average re-roof project size. So if you're not financing today, that tells you that there's probably a large segment that you just aren't being able to serve, because those folks, more than half of them, are opting to finance projects in that 20,000 plus ticket size range.
Yeah, I think that's been kind of the big difference. In the last, 5 to 10 years or so, the project price for your just normal, average, everyday 30 square roofing project has almost doubled. It's gone from everybody kind of thinking, hey, 10,000, maybe 12,000 bucks for the average roof out there, to this $18,000, $20,000, $25,000 range. And not everybody just has that kind of money sitting around. And even if they do, if they can get their finance rates lower than what their investment return is, if they're playing the stock market or doing some of those types of things, you can, that's the reason I bought a house. I bought a house because the finance rates were so low. I could have probably just paid for it, but it really came down to, hey, if I can get that low of an interest rate and keep that money and go and invest it over here and earn a higher interest rate, I'm making money. And so I can see why more and more of that is becoming more prevalent as we move forward. So what keeps contractors from offering financing to their clients?
Yeah, I would say that probably the number one reason is fear, and it's a fear of not knowing the answers around financing in general. Fear of denials. Look, I wouldn't want to be the contractor sitting in the kitchen across the kitchen table from someone that gets a denial, then having to be the credit counselor, right? I think there are definitely ways around, basically not having the need to understand everything financing, right? Finding the right financing partner that can help you and kind of lift that burden off of you and allow you to offer financing without having to get in the weeds with your customers.
And a lot of also the, if it ain't broke, don't fix it model. So I have a business, it's working for me. Everyone that I sell to pays cash. And so if you go, great, but are you closing every single deal that you offer? Because if the answer is yes, I would say, sounds like you have a winning solution and you should go out and find more customers, and you'll probably find some that would be interested in seeing payment options. So it'd be good to offer. And two, if you're not, think about that time you walked in to go buy a car. You didn't have to ask for payment options. They were just given to you. That's just the way cars are bought today. And Jim, to your point, average roof cost now is on par with the car. So maybe it hasn't been that way for the longest time. People weren't expecting to be, as a contractor, as a roofing contractor, I'm not expecting to have to also be someone's financial solution provider. But now that these ticket sizes are so high, that's becoming almost a demand or a request of these customers. And it can be the difference between someone going with you versus your peer, with everything else being equal. But there's a payment option from this other party.
Yeah, and I'm sorry, I was just going to say, people can be funny about their personal finances too. You can imagine a contractor going into someone's home and saying, hey, look, we have these great payment options available. And people say, well, what is it about me that makes you think I need financing, right? And offering them financing, they may be reluctant to kind of, open up their personal, lives to someone they don't know. Maybe they just don't want to admit that they would prefer financing, but they don't want to, throw it out there. So by not having financing, it's definitely a detriment.
Yeah, at that point of sale, you can imagine somebody at the point of sale, I'm sitting across the table from you and you're offering me products, and me asking you, well, do you offer financing? It could be an uncomfortable question to ask as a customer. I feel strange. So you offering it, what's the harm?
I kind of see a few different things there. As you guys are talking, like one of the things we teach as salespeople is whenever you ask a question, especially a closing question, like you're ready to get this person as your customer, you want to give them two choices, and those two choices are, and neither one of them are no. It's just, which way do you want to go? Do you want to pay with a check, or would you prefer to finance this? And so you have some options available for them to choose from. The other thing is, homeowners are in this situation of not wanting to ask. So if you have, nobody wants to say, hey, can you finance this? Because it comes with this thought process that I'm not financially sound enough to pay you cash for this.
That's right.
But when you ask a question like, would you prefer to pay by check or would you prefer to finance this? That opens it up at that point to say, you know what, I kind of prefer to finance this if I can, because it's only this much per month. We'll get into some of those questions here in just a second. So that's kind of some of the fear. And, some of my fear was just understanding like the finance itself, like what kind of options do I offer? Do I offer same as cash? Do I offer 5-year? Do I offer a 7-year? What do you have to offer? What are our best practices? And so getting those things answered, it was just like, man, that seems like too much. I don't want to mess with that. And it's going to be too complicated for my salespeople. So I don't want to mess with that. And really, it's just taking a little bit of time, and it doesn't take very long whenever we got involved in it to get it figured out, to kind of figure out these, usually we say about 3 options, so keep them pretty simple, something same as cash, something a little bit more long-term, a 5-year, and then a third option, depending upon whoever your finance partner is, whatever they may choose for you to offer. Makes it very simple. Which way do you want to go? Monthly payments sound a lot better than $20,000. And so a lot of those things come into play, and you get taught by whoever your financing partner is of how to go about presenting this in a way that makes sense to that customer. Oh, it's pretty funny when you said about the car thing. Nobody asked you if you're going to pay cash for it. So what do you want your monthly payments to be? That's the question.
Right.
I'm the opposite. I'm like, tell me how much it is cash, and then we'll figure that part out later. It's pretty funny. So what does it take to get qualified with a financing partner to offer financing as a contractor? What are some of the things that they need to have in order to make sure that they can offer financing in the first place?
Sure. A key part of that is that you have a demonstrated history of being in business, of delivering to customers, and that you don't have your reputation is solid. This goes back to actually some of the fear points of brand risk. So you've now built up a strong brand. Introducing somebody else into that mix is a risk. The same thing here for your financing partner. They want to make sure they're partnering with contractors that have a good reputation and good standing in the industry, and also that they're serving those customers, delivering on time.
Yeah, and the other thing I would mention in terms of different financing partners that are out there, I do realize there are folks that actually will do a credit check on a contractor, as well as underlying customers when they apply for a loan. So that's something you want to think about too when choosing a financing partner.
Mm-hmm.
Okay, so how about for you guys? Are there specific criteria for constant energy? I know you don't really want to talk about yourselves too much. We're here to provide value, but that'll give these contractors some kind of idea of what that might look like. Is there amount of time in business, better business bureau ratings, any of that kind of stuff that get taken into consideration?
Certainly. We like to see 2 years in business. And if you're not at that level, it's one of the things, every company is different, but it just means you may go into a manual review process. But 2 years in business and just consistent volume, because that's a good way for us to see that if you've been operating for a while and you've been able to sustain that level of employees, that means you have a business that's actually going to survive, and we're not running the risk of funding projects that may not get completed. So I'm explaining in that regard, why is a financing partner asking you those questions about your business? They want to know that they're delivering funds to you and that you're someone that's going to complete the job for their customer, because they're on the hook if you don't finish the job to help make that customer whole. That's a part of consumer law that we have to look out for, and that's why these financing partners might seem kind of heavy-handed in that diligence review. So that's our first and foremost, and then looking out for your reputation in the space, and that there aren't any complaints against you or, say, filings at the state level. So we'll just make sure that in your market you are in good standing, and then go from there.
All right, cool, awesome. So that's a little bit of credit, not real hard. It doesn't seem like. A couple of years in business, you service your clients, you're paying your bills and that kind of stuff. It's probably going to be a pretty good chance of being able to offer financing, because it's really the thing that clicked for me is it wasn't really about me as the contractor in the big scheme of things. It was really about that homeowner and their credit risk is what it comes down to. That's kind of one of those fear things that we should probably get over and not be too concerned with. Is most of us can offer financing. It's really more about the customer.
That's right.
That's right.
Us.
That's
Okay,
right.
cool. What are the top 3 questions a contractor should consider when choosing a finance partner?
It's funny. I think one of the questions that I think contractors should be asking, but I don't think they are. Or not enough. Everyone's always talking, what's your lowest rate that I can offer my customers? And the question they should really be asking is, what's your highest rate? Because this goes back to, what we were talking about earlier, Jim, with, predatory practices, or are you offering the right programs to your customers? When you talk about the lowest rate, there's a very finite number of customers that are going to be able to qualify for that rate. And these are folks in the very top tier credit rating and debt to income ratio. So the majority of your customers are going to have a much higher interest rate. And what is that highest interest rate that any financing company offers? They can be up in the 30s. 30%. We're talking back in the 80s types of interest rates. So understanding what the highest rate is when you talk about putting your customer in a program that might not be suitable for them, that's a really important piece of knowledge to have. A lot of financing companies are extremely reluctant to offer that information up, and I would implore your listeners to ask that question because it will really give you a good look under the hood on what's really happening.
Mm-hmm. And that goes also to not just that introductory rate, but the post-promotional rate, because we all see those products that have teasers, and it might be 0% for however many months, but after that, what happens? And plenty of lenders offer those promotional products. We have them as well, but not all promotional products are created equal. So it's worth asking about those details of the back end. So the other questions they should ask are, in order to see those firm offers for a customer to see what they can qualify for, is it a soft credit pull or a hard credit pull? So difference between those two, a hard credit pull is just that you're going to get a mark on your credit report, and ultimately just by checking your score and checking what you qualify for, your score goes down. And it's worth asking because in some cases, many folks will say it's a soft pull, but that's just to get a preliminary idea of what you qualify for. And once you get to see the real offers, it's a hard credit pull. So be mindful of that because there are lenders out there, ourselves included, that have a soft pull all the way through that process of seeing your actual offers and signing a loan.
And so we as like consumers, that soft pull, what we hear of that as is an inquiry, right? Like an inquiry on our credit, and like, is this going to be an inquiry on my credit? That a lot of people ask that whenever they're going to get financed because they may have something else going on. They may be trying to buy a new house or anything like that, and maybe thinking about one in the future, and all those things affect our credit. So I just want to make a note here for everybody that's listening. Ask questions, you guys. As we're talking and we're conversing here, this is a two-way street, and not between me and these guys. It's between us and y'all. So if you have questions about anything to do with finances, we go through this. You came to this with some questions. Get them in here, and I'll make sure that we get them answered either at the appropriate time or right then and there if it pertains to that question. So that sounds like some of the things that we should be asking our finance partners. I know one of the big ones, like I always see all the time, is like, what credit score do you finance down to, right? Because it's all about me in that particular situation as a contractor. Can I sell somebody or not? And what do you guys think about that? Is that one of the questions that somebody should ask, or is it really something they shouldn't worry too much about?
It's a good question to ask, but it's within the context of what John mentioned earlier of what are the products you're going to offer these people. So example, one of the things, a lot of folks have these products called deferred interest promotions. And it sounds really great because what you'll be able to do is go in there and say, look, you can sign up with me today, I'll put your roof up, and as long as you pay off this $20,000 loan in full in the next several months, it'll just cost you $20,000. But if you miss that payment by a single day, you will see charges, as John mentioned, some of those rates are as high as the 30s in terms of percentage points. It could be an extra thousands of dollars that you charged your customer that the lender did. So they had to pay extra for that job, and it went all to the lender that you probably paid fees to offer this promotional product for. So we here at Constant Energy Capital have promotional products where people make payments from day one, but that promotional period truly is 0%. If you miss that promo window by a day, guess what? When it rolls forward, you have the same monthly payment post-promotional period, and there's no deferred interest, basically clawback, where they go back in time and yank that 0% away from you and replace it with 30%. Those could look the same. If I showed you those on a piece of paper, we'd say, hey, 0% for this month and then another rate, 0% for this, another rate. They almost look the same. And so I liken this to something we chatted about earlier about how some of this is just like the products you're installing on the roof. You just need to make sure you're getting into those questions about what is the product I'm offering and putting here, and how will it take care of people in the long run? How will this hold up in a hailstorm? How is it going to hold up when this event happens in the neighborhood? It's the same thing for financing. What happens if they lose their job or they can't make that balloon payment? We look at it that way, and so that approach of responsible lending, especially for roofing contractors, you're putting a roof over somebody's head. You want to make sure they're safe, and you want to do the same thing in terms of the payment options you're offering them to finance that project.
So I want to get some clarification there. I want to make sure that not only do I understand this, but everybody listening understands this. So you offer an 18-month same as cash, somebody else does too. At the end of theirs, they don't get it all paid off. They still have, let's say, $5,000 to pay off. It balloons up to 30%. Is it 30% on that $5,000, or is it 30% on the whole $18,000 that they're now paying? And so that changes, right? The second that day hits, it changes. And then with you guys, that day hits, they can just keep making the same payment, or is there an interest rate on top of it now of whatever's left? Can you clarify that a little bit of what exactly that looks like?
Certainly. So we have products that no matter what, you miss a payment, we may, late fees may be incurred, but we actually set those up because we just want to incentivize a customer to then get back on track. It's not meant to be something where we make money. We're just trying to say, hey, if you pay, get back on track and we'll waive that fee. But what you signed up for in your loan product are the rates, are the payments. There's no conditional, if you don't do this by this date, then we're going to retroactively change things. So with our product, say that 18 months in that example go by, when month 19 rolls around, you'll have the same monthly payment. It's not going to spike and suddenly possibly put stress on your customer's budget.
Awesome.
And some of those products, the 18 months, it's even trickier because it might be no payments. And think about the person who, out of sight, out of mind. If I'm not seeing that on my monthly statement, boy, I can't tell you how many folks I know that have said, oh, I did one of those once on a mattress or on something else, and boy, it ended up costing me 20% extra because I forgot. We set people up to make monthly payments, but those first payments, you're just paying yourself back. It's all 0% money. You're putting it back in your bank account. It's just putting you on you're budgeting for yourself. It's really being responsible with this financing.
That's super cool because, out of sight, out of mind, right? And a lot of people, I know I'm that way, especially when it comes to things that have to do with money. Okay, that was really interesting. That is a unique difference between you guys and some of the others that I've seen. There's actually a term for that other thing, and I'll say it so you guys don't have to. It's called predatory lending, and that's one of the reasons why I struggle with financing is predatory lending, because it's all about them seeing it. I think you guys kind of look at it like you kind of made your money on that money already. There was a fee associated to that contractor to provide that particular option. Like, hey, we got our money, but we still want to get our money from the homeowner too, and we will. We made our profit there. Is that a fair assessment?
It is. The challenge being some of those products, when you set someone up not to pay you, for a while, and then there's this big penalty. If they fail to meet that deadline, it actually signals to a lender, oh gosh, this might be trouble. And so that's why they charge those high rates. We just don't build products that rely on someone taking $20,000 and finding a way to pay it off in one big balloon, or else they're going to have this giant charge, So it really comes down to, it's more about making sure your customers are safe in the products that they're signing up for. And it's the same as you're evaluating these products. You might look at two different manufacturers and their materials. They have different attributes, they have different cost structures, installation procedures, but ultimately it comes down to what you decide is best for your customer and what are you selling on? What's the value proposition that you're trying to deliver? Is it a safe roof? Is it a cheap roof? What are you going for? And the same thing applies to the financing.
Yeah, my value proposition is the baddest ass roof in the entire neighborhood. That's the one I'm selling. So that's kind of the way we look at it. Is let's talk about that a little bit. We had a question this morning I put out that we were going to be doing this on my Facebook page, and a guy asked a question. He goes, "Well, these insurance restoration contractors, how does financing apply to them?" And I have some of my own opinions. One of the things I do want to talk about is we are here in Texas. We have what's called House Bill 2102, which is this new bill that really just reinforces an old law saying, hey, you got to pay your deductible. And in the state of Texas, deductibles significantly different than they might be in other states, but I see that coming. And this is coming for other states. The average deductible in Texas is about $4,200 right now. I think you guys can probably back that up, that's what we're seeing with deductibles as high as 8, 10. I think the highest one that I've seen has been $27,000 deductible. And so those are pretty significant. Now, obviously that's on a big project, but here in Texas, you now have to pay that. You have to show proof of payment of that. And so how do you guys help with that type of thing? And how should finance companies help with that type of thing?
Yeah, so in terms of deductibles, we've obviously had a lot of interest from roofing companies looking to finance deductibles as a standalone finance or a standalone loan. And we're happy to do that. And in fact, we're happy to, when that deductible is financed, provide automatic notification to insurance companies with proof of payment for that deductible as a value add. So that's taken out of the customer and the contractor's hands. I think more intriguing than funding the deductible is being able to fund the whole project. And we can get into that in terms of how you upsell a project, going from maybe an Owens Corning, Oak Ridge or Supreme to a Berkshire, right? And increasing your overall project cost. But as it relates to HB 2102, I think financing the deductibles and funding the contractor directly. And this is really important. I've talked to a lot of contractors, and they all talk about how time-consuming it is to be chasing customers and contractors for the second RCV payment or these insurance payments, and it's tedious follow-up that you shouldn't have to deal with. So we've come up with a program that we pay the contractor directly. When that customer signs the loan documents, we fund that contractor 50% right up front. So they get started with the project, give their customer peace of mind that they're getting their roof fixed or a new roof over their head, keep the rain out, and that contractor can go buy the materials. We notify the insurance companies with proof of payment, and at the end of the project, we fund them the second 50%. They don't have to deal with the insurance companies. They don't have to chase anybody for payments. It's payment insurance, for the contractors.
That's right. And I see, building on that, I see a question in the chat related to this. And so the idea that, hey, someone's looking to finance $1,000 or $2,000 deductible versus a larger project loan, say this is a $10,000 job. It's a great thing to ask your financing partner. So us, for example, if you were to be offering our financing to customers, we will approve them for the maximum that they qualify for, and it allows them to choose. So in the event someone thinks they only need $3,000, if they have the opportunity to upsize that, we will let them know. But if they asked for 10 and they ended up only qualifying for 7, we'll also let them know that too. So they then have the freedom and the flexibility to choose, you know what, okay, thank you, maybe I will take the $7,000 and I have $3,000 to pay the difference, for example. But going back to HB 2102, a great, and just generally insurance folks, is that financing the deductible is one thing, but imagine if, I know HB 2102 went to changing how deductibles were handled. This is a new paradigm now, but imagine if instead of someone just financing their deductible, they opt to finance the entire project during this insurance claim. A few things happen. Number one, you will have certainty of payment for that project when it's completed, regardless of the status of the insurance claim process, because that lender is going to fund the project. So that takes that off the table for you. It also takes it off the table for the customer, because if that insurance claim process is going on longer than expected, what do you do now? You're doing this work and you're kind of juggling this whole process here. And number two, imagine that instead now, if they finance that whole job, that insurance claim check that comes back, it's up to them if they want to use that to pay the loan down, put it into rainy day funds. You are now possibly helping them have some savings in their pocket, emergency funds or other projects they need to fix, because we're here to finance that roof project. The insurance company is going to make them whole, but we can still finance that roof project, and those proceeds can be something they can use for other opportunities.
You couldn't have said it any better. That's literally what we teach, is to sell a high value roof. Remember that badass roof I was talking about earlier? You've got this 30-year or 3-tab roof on your house. Your insurance company is going to give you a certain amount for it. For another $5,000, $10,000, you can put on this amazing roof. Not only the product, but the system itself and the way that we do it, that is not comparable to any of our competition. It does cost more. You can finance the whole thing. We'll help you get more money from your insurance company because they missed a bunch of things on your scope, but it's not going to be this much, but it's going to be a great down payment towards this. You could actually use the money whenever it comes in to pay off the loan if you want to, or pay off a high interest loan, buy a car that you would normally have to pay really high interest on. Go to Aruba, do whatever you want to do. That's up to you with your finances. I kind of like the rainy day fund. That was actually pretty smart. Maybe invest it even if you can earn more interest off of it than you could on what you're financing. But there's so many different options. So Mario asks, what's the dealer cost per transaction on a same as cash program? So do we have that answer available today, or is that something that they should contact you? Because we're not here to sell Constant Energy. Their number is going to be different than other financiers. If you're willing to share it, go ahead. We'll just answer it real quick. But if you'd rather them just get a hold of you and have that conversation, that would be fine too.
Sure. Well, we have several, again, with the not all promos are created equal, and even the same with ours. We have multiple flavors of same as cash programs because those have different benefits for different contractors, what they're trying to solve for. It comes down to what is the monthly payment you're looking. Maybe your customers have a lower monthly payment need. They could, if it's this short, guess what? Those payments are going to be this high. And the longer out you make that same as cash program, you're effectively, look at that dealer fee more as you're paying the interest on the behalf of your customer. That's you are saying, look, I'm going to build this roof for you, and this is going to be a subsidized loan. So this is a 0% financing or some low rate, but that's a conversation that you'll want to have with that financing partner, but it certainly varies in the same way that the roof products vary, even though it might be the same shingle type.
Yeah, if I understand things correctly, the shorter the time and the bigger the payments, the less the dealer fee. And the longer the time and the smaller the payments, the higher the dealer fee. So it's going to vary depending upon the amount of time that you're doing this same as cash. Is that correct?
That is.
Yeah. Right. And just to give an example, I mean, we have 6, 12, 18, and 24-month term same as cash programs available. Mm-hmm. So they kind of span from short to long, like you said.
And even some that are flexible, where there's a same as cash, as we talked about before, same as cash period, but as opposed to what I like to call exploding deadline of you've got to pay it off by this moment, you have a flexible deadline. And even those, a great example of when to use that, all the roofing contractors out there who are listening, you ever talking to somebody that might be selling a house? This is a perfect opportunity to offer them a product like that, where it's same as cash for a period, and then they have extra time just in case, say they need more time to sell their house. But this is a way to help them not have to come out of pocket too much and still maximize their home sale, for example.
So let me ask a question. This kind of leads me to something. So let's say we did the 24-month thing, or this, the one that Paul's been talking about. This length of time, same as cash, right? And that seems to be fairly.
We call that product we call level. That's our level product.
So it goes past that date. Does that affect?
Yes.
Okay, so it goes past that date. So now it's a little bit longer bit of time. The payments don't change for the customer. Does that affect my dealer fee at all?
It does slightly, because the payments they're making during that promo period is smaller. So it goes to it's not as much as if you gave them this long of a sorry, John.
Perfect.
It's not as much as if you gave them all of this promotional, but you've allowed them to have an affordable monthly payment from day one, even during this same as cash period. So it has a slight increase to that fee, as opposed to it might be a, say, 10-year loan with a 2-year promotional period. That is going to be far less than a 4-year promotional period, but the monthly payments will be lower.
Gotcha. Okay.
And a lower fee to you.
Yeah, this is where the attendees here that are thinking about financing, they should get a hold of whoever their financing partner and ask those kinds of questions and get deeper into it. Mario had another question. On the insurance world, is it better to have finance only the deductibles due to having to pay the interest for the customer at the front from our end? That's a decision, I think, that's really up to the contractor. And the way I look at this is, what does it cost me to collect the money? Okay, so time has a monetary value to it. The administrative people that I have following up with the insurance companies, making sure things get paid, the time my salesperson is going out there to collect money, all of that has a price associated with it. And you have to figure out, what does that cost you? And we've kind of done the numbers on this. It costs you about 5% of the project in the insurance world just to collect your money. With the administrative time that it takes, the amount of time you're taking out of the field that you could be selling instead you're collecting, those type of things, which even at collections you should be selling, getting referrals and things like that. But that's how I look at it. How do you guys look at it?
We look at it the same way. It's very much a other element. I would just, building on that, other elements are the peace of mind. You look at the couple extra. Say the extra fee that you're paying is not just peace of mind for you, but also for your customer, that they're not going to have to go scramble to find funds if this insurance claim goes south. So it's actually it's almost insurance claim insurance in terms of payment insurance. You're now not going to have to be at the mercy of the insurance company for you to be paid for that job, and you can then move on, and your customer can also move on. So it's like you're not just paying for having that money. There's a whole bunch of other values and avoided costs, as you mentioned, Jim, by doing something where you finance the entire project.
You're also not at the mercy of a homeowner. The homeowner is one little knick-knacky thing for whatever reason. As soon as you say it's done as a contractor, if I understand things correctly with you guys, the other 50% is funded.
Mm-hmm. And we'll want to see, see evidence that it's done. So it may be something like a warranty certificate from the manufacturer, so we know that roof was actually put on that house. Mm-hmm. But we're not going to hold it up because the customer says you trampled their flower bed.
Perfect. Good. All right. Cool. So, man, we've had a lot of good questions this morning. Mario, well done. And one thing, Mario, I just want to build off of that a little bit. When I talked about selling that amazing roof, right? And it's not just about the product, but it's also about the system. When you sell a roof like that, if they're going back with a different shingle and I have my unique system, that thing costs a certain amount, whether you charge per square foot. There's a variety of different ways to do it. But you're saying that this roof costs this much. Doesn't really have anything to do with the insurance anymore necessarily, other than that the insurance is going to offset some of that cost based on what they get from that insurance company. but I'm selling my roof for this number, and I sign a contract for that day. Like, hey, this roof's going to cost you $25,000. You've got 15 from your insurance company. I can probably help you get another 2, 3, 4 because they're missing some things in your scope, and I do. And they get that money from their insurance company, but they're financing that $25,000 because you sold them a much better product and a much better roof. So it's not a situation where I'm losing money on the insurance claim because I'm doing it for insurance company dollars. I'm doing it on this price that I charge for that thing, and I incorporate my dealer fees into that price. Does that make sense? And would you guys agree with me on that, on the right way to go about selling that out there so you're not getting whacked with dealer fees like crazy?
Yes, it's the same as, we look at financing as more like a sales and marketing tool. You are, and even the word, when you talk with customers, just want to insert a little pro tip here for offering financing, is actually not to talk about financing at all. You are going to offer payment options, because even that, from a stigma standpoint, is just saying, hey, would you like to hear, I have some payment options if you'd like to pay for this over time. It's not, you look like someone that I think needs to have some help paying for this project. It's, would you like to see some payment options? But to that end, it's a sales and marketing tool. We all have sales and marketing tools in our business, and we make sure that we recover those costs and our total cost of how we build up the project. So you have your office staff, you have your marketing materials, all these different things that are not directly a part of the labor and materials on that job. You're building that in. Look at these fees, transaction expenses in the same way. And John's team can help anyone get more granular about that. We actually help you even calculate based on what you'll finance, what you take on credit cards and checks. Here's what we would recommend that you would allocate for this cost, so that at the end of the day, you were made whole on all these fees.
That's awesome. That's all. Okay, perfect. Good. We got a question from Andy here. These dealer fees that they pay. He actually says, is this a question for an accountant or is it for you guys? We'll see if we can answer it. But are these fees tax deductible?
So I'll go ahead and take this one. I am not an accountant or a CPA, and everyone should always talk to their tax advisor and CPA. But my understanding, these really are direct costs of that job, just like the labor, just like the material that you used on that roof. And so it would be a part of the total expense and should be something that this is a tax deductible item on your profit and loss and your taxes when you file your income tax return at the end of the year.
Awesome. So Andy has another question. How does Constant Energy differ in helping contractors market to their customers versus other companies? I would suggest, Andy, get a hold of Constant Energy for that. I don't want this to turn into a sales pitch for Constant Energy. We're here to offer value, how you offer financing. These guys are more than willing to talk to you. John will talk financing with you all day long, every day, and knows it inside and out, and very helpful with you. We're going to give you
Andy, feel free to give me a call directly.
Yeah, we'll give you the contact information at the end so you can get a hold of them. Brooke, how quickly will you know if your customer is approved? Is the form online that you can complete in home with the customer during the sales presentation? Boy, she set you up perfectly. Let's talk about that a little bit. I think this one is one of the things that with Constant Energy, again, kind of you guys are a little bit different. So I get we're kind of saying, hey, it's one of the reasons why we're talking with you. Like I see so many different financing options and they're all pretty much the same and they kind of have the same vibe to them, where you guys are a little bit more about this win-win-win, win for you guys, win for the contractor, win for the homeowner type of business. So let's see if we can get that answer quick. How quickly are they approved?
Yeah, so just going back to Paul's statement about our platform being a sales and marketing tool, or any financing company for that matter. So what we do is we give our contractors a bunch of tools to be able to send out our application prior to site visit. As it relates to being a sales and marketing tool, being armed with that customer's buying power prior to site visit is extremely powerful. So when that customer does, to answer their question, when that customer applies, they get notified at the same moment that the customer does of the maximum amount they're approved for. So a good question to ask your financing company might be, do you just approve up to the project cost, the quote that's in the system while they're sitting at the kitchen table, or do you approve them up to the maximum amount given their credit, their FICO score, and debt-to-income ratio? That's a big difference, right? So if you go in knowing that your customer is approved for $100,000 versus the project cost, you can go into that site visit and that inspection, that roof inspection, with an opportunity to really increase your project size. Again, going maybe from a shingle roof to a standing metal seam roof, and really increase that project size. Throw gutters on the roof, whatever it might be. But you do get notified at the same moment that the customer does, and the approval process takes about 8 seconds, I think, on average with our platform.
Mm-hmm.
That's fantastic. So a couple things that stuck out to me there. Number one is if I'm running an appointment, I can actually send them the credit out first if I have an idea that they're going to be interested in possibly financing this thing. And so when I send them that link, they fill it out. Not only do they get notified of the maximum amount they could get, but so do I. I know walking in the door that this person could get up to $100,000. Let's do the house makeover, man. Let's get after it. Let's put some value back into your home. That's pretty cool. I haven't seen that before, and I think that's pretty unique. We got some questions happening here. Go ahead, John. Sorry.
Sure.
No, I was just going to say, if you take a look at the most successful roofing contractors, in Texas, they're all, you mentioned you can send it out to folks who you think might want to finance, and I would not argue that, but I would add the most successful contractors send it to every job. They lead with financing, and they understand it, and it works. And if you look at the most successful roofing contractors, you'll notice not one of them that I've run into doesn't offer it, and in fact, 99% of them lead with it.
And a part of that, let's talk to the psychology of why and the smoothness of a sale. We all know that it's those speed bumps in the sales process that are where you get derailed and lose that customer. So if I can send this application to someone that takes just a minute or two, it's a few pieces of info, and they get that answer within a few seconds, if it's positive, hooray. Now we all know that we have the funds available, depressurizes this whole conversation, and instead of walking in there and someone going, oh my gosh, you're going to charge me $20,000, you say, no, look, it's $200 a month, or $240, or you're now talking about these monthly payments. It can take the sting out of a sticker shock of these big roof projects, number one. Number two, suppose they get a decline, it allows your lending partner to contact that customer and see if there's something they can do, either add a co-applicant or resolve something to turn that into a successful application. And number three, in the event it was a true decline, that lending partner has the opportunity to clarify with the customer what happened, and then when you show up, you can leave that in the rearview mirror and just talk about the project.
Awesome, cool. So we got a lot of questions that came in. I want to make sure we get them. We are on a time limit, and so I want to make sure we get these in. So we're gonna rapid fire these as quickly as we can possibly answer them. Okay. How often is it that financing makes more sense than simply cutting a check if you can?
Boy, well, it's a great question, and I'll answer this from the standpoint of a consumer or the customer. The studies have shown that more than 50% of folks have less than a month's worth of savings in the bank. So everyone's running pretty thin. If you can cut a check, great, but what you've done is you've taken money out of what's a liquid for you that you could have in the case of an emergency or other need, and you put it into your house. It's very hard. Once that money's gone into your roof, it's tough to get that out quickly. So what this does is it allows you to have that flexibility, and it's why we make the financing process so easy, because that way you could even go ahead, sign up, and with no prepayment penalties, If you want to decide to go ahead and pay it down later, you can. And then all that money is still in your pocket. Or all that money now is you've paid it into your roof, and that loan is paid off.
I was going to say, it's not in your pocket, it's on top of your
The
house.
opposite.
Yeah,
The opposite.
it's up on top of your house. All right, cool. So next question. A lot of companies say they don't charge late or other fees. Is that real?
I love this one. I love this question, so I got to take it. This is my favorite because imagine if I were your landlord and said, hey, you're going to pay me rent every month, but guess what? If you don't pay me on time, don't worry about it. There's no late fees. That has to sound crazy. And it is, because if I told you that you agree to pay me every month, but don't worry about paying me on time, hopefully you're going to go, well, what's the catch? And the catch is that those kinds of products are actually some of the most predatory in our view, because what they're doing is the day you miss that payment, they're just charging you interest on that missed interest. We as a company have a practice of following state law and giving people a grace period to pay, and these fees are capped at these really small amounts. I mean, we're talking $10 on a monthly payment, whereas others that say they don't charge late fees are just compounding the interest. And so just to give you an example of what that could mean, you as a roofing contractor might offer one of those products. Your customer pays 1 month late for the entire life of the loan. So they have a 10-year loan and they pay all 10 years of payments 1 month late. And at the end of the loan, they owe thousands of dollars. But they made every single payment they were supposed to make. That feels predatory.
There's that word. He said it. All right, good. Good. Yeah.
You got me there, Jim.
It absolutely is. It is absolutely predatory. They literally made every payment they were supposed to. And it's just very frustrating to see those type of things happen. As a consumer that had a problem with that when I was younger, once you get under it, it's so hard to get out. It is so, it's like digging a hole that's in a quicksand. You just can't dig fast enough, it seems like. And so that was
and that late fee, it's hard because here we are. I'd love to be able to say, no, of course we don't charge late fees, but the only way folks don't do that is they're actually charging you even more penalties, even faster, but it's marketed as no late fees. And so it's tough, but I feel like we're out there trying to fight the good fight and make sure that we're protecting contractors and their customers. Because if I tie this back to something really important, you might have installed that roof 3 years ago, and when they find out they owe thousands of dollars extra, and it's from the financing product you offered, I can tell you that it's countless the number of times I've heard of the one-star review that fantastic contractors have, and it's because of a financing product that burned a customer, and they hold the contractor responsible because it was the contractor who offered it to them.
Yeah, they never hold that financing company responsible. There's no one-star review on those guys. It's always the contractor. All right, so we got, first off, thanks, Katie. Great question. Kasha, I believe you had the question before that. Van Estes, if I sold a $20,000 roof on an 18-month zero-interest loan, approximately how much would I need to increase the $20,000 price to cover the cost of my loan plus my fees? Can you give a ballpark number?
That is a great question, but there's a couple things there.
I think, there's an equation that we use with folks, and it's very simple. So, you have your cash jobs, you take credit cards at your 3% fee, and your finance jobs. What you can do is average them all together and increase your project costs. I think it usually comes out to like 1.5% across all jobs, regardless if it's finance, cash, or credit card. That way you're covered across all programs, and you don't care what you sell. You don't have to, increase, the cost of one because it's financed or lower because it's cash, or et cetera. And that's, one way in which we can work with contractors to, figure that out.
And a part of that structure really comes down to the fact that someone, it's not a markup. You can't, just so you know, you can't take a project and when someone goes, I'd like financing, you go, oh, great, well, let me just add on this extra fee and then you can finance. So the way you do that, and it goes to what we discussed, is talk with your lending partner, and we'd be happy to do it even if you have another lending partner, but we could sit down with you and talk about how do you allocate this so that on the front end, when you're making quotes, you know, on a job where someone chooses cash, hey, great, you didn't have to pay any of those fees, and on the job where they took the 18 months, you did, and at the end of the day, it all washed out and you were made whole.
So here's a question for you. Could I offer my product and say, hey, this is how much it costs? Let's just use a fictitious number of $500 per square. And say, hey, that's our number. Do you want it or not? Kind of thing. Do you want to finance this, or would you prefer to pay cash? You just show them the option, say, hey, which one fits for you? One over here is 500, one over here is 400. Okay, you got two different ones. Which one's the best one for you? And they say, well, I like that one. Okay, how do you plan to pay? Do you want to pay with finance, or do you want to pay cash? And I wouldn't use finance. You want to make payments, or you want to pay cash?
That's right.
And person goes, well, I pay cash. I go, great. That actually is going to give you some savings. Could I do that? Can I do that type of thing? Take something off of our standard price because they're going to pay us cash?
Yes, you can do that. So it's certainly something you could do. You don't have to, but it would be your option to provide that as and that's where it's the front end. Let's solve for, we collaborate with you to solve for what that amount needs to be. And then you can offer, if you choose, a cash discount if someone doesn't want to have that pay over time option.
So Van, in order to answer your question, one of the things we do in coaching is we say, hey, add on whatever percentage you want that is your average dealer fee and say, that's our price. Okay, this is our price. But if you were prepared to pay cash for that, here's your customer savings options. And this is option 1, 2, and 3. You can save 2% this way, 3% this way, or 5% this way, depending on how much cash you put down. Part of it, half of it, all of it. Does that make sense? And that should work just fine for being out in the field. It's not real hard to do. And you can even add in like a time savings discount. Like if you choose us today, I can save you another 2%, 5%, whatever that number is, because that's what it costs us to go back and forth with you guys. There's all kinds of ways to do that. We teach these guys that type of stuff all the time, help them put together those presentations to sell this kind of stuff. So any other questions that I see on here? Oh, here we go. We got one more. Came from Mark Smith through the question asking aspect of this. With Green Sky, you pay with a shopping pass, which incurs a credit card fee in addition to the dealer fee. Is Constant Energy like that?
No.
and I wonder if we shouldn't just keep it there. That Mark, it's not.
Yeah, that's fine.
And I would say, hey, get a hold of these guys separately if you want to get that question answered further. This isn't a situation where we're trying to compete between each other and that type of thing. We're here to try and talk about what are some of the best ways that you can use financing and what are some of the options that you have out there. A lot of them are good options. They really are, and they are helpful. These guys, I came across them at an event, and it was refreshing to see, like, hey, they actually care about the consumer. That's weird. Like, I always care about themselves, and they kind of care about the contractor, but that consumer, man, just pay us, pay us, pay us. Well, there's actually that third win there, which is what I'm always looking for between vendors, contractors, and homeowners. So here's another question from Katie Crow. I know we're going overtime. We can kind of hang out here for a few minutes if that's okay with you guys. I don't know how much time you have.
Yeah. And Jim, before you jump into that question, just one thing I'd want to say to everyone. I feel like this has been hopefully a good opportunity for people to see that a lot of these questions get into some details that are beyond that top layer of what you hear. And I'm sure that is something you experience when you get pitched on, new roofing materials. And you have to get one layer down to make sure that you're really protecting your customers. So we would be happy to talk more with anybody about these nuanced questions. We want you to feel really equipped to be able to offer these products in the same way you feel comfortable offering roofing products.
So we got another question, but I want to get one handle before we hop off. or before people have to go because we're running late on time.
Yes.
Dan says, hey, can you give us your contact information? So if you'll say it, I'm actually going to type it at the same time so everybody has it. And I'm going to put myself on mute so you don't hear me type, okay?
Great.
Yeah, my contact information is John Geary, Geary. Email is jgeary, Geary, jgeary @constantenergy.com. My direct phone number is 207-494-5026.
Great. And you can reach me, Paul Jameson. That's the letter P. Jameson is Jameson @constantenergy.com. Thank you, Jim. And phone number there, 207-494-5011. Happy to chat with anybody.
Yeah, awesome, cool. So I got both their emails in there. I wasn't fast enough to quite get their phone numbers in there, but they're on the audio here. You guys can rewind it. We'll send this out to everybody at the end. So question, do you charge contractors to get their money?
I think this is similar to the last question, and the answer is no. There's no swipe fee or credit card fee.
Yeah, we send money electronically to your bank account, and the fees to handle that we absorb.
Oh wow, cool, awesome. That was an easy answer. I love it.
Yeah.
So I'll leave that comment out of there. So we don't want to disparage anybody if we can avoid it. But I get you, Katie. Hey guys, I want to go ahead and wrap it up. We've been here a little bit more than an hour, which is a long time for anybody to talk about financing. No offense, just kidding. I find it fascinating. I really do. I think more people should be aware of it. You guys are going to be joining us at the Contractor Strategy Conference, if I understand things correctly. So people can come to meet you there. You're going to talk a little bit about this aspect of things in our business strategy quotient of our conference. So we spend 4 days with these contractors, helping them develop their strategy for 2020. And so we do that in leadership and culture, business, finance, not you guys, but actual like finance, running your books right and those type of things.
Mm-hmm.
So if anybody is interested in it, so I don't not mention it, go to contractorstrategyconference.com, and that's contractor, not just one. So it's singular, contractorstrategyconference.com. We just didn't want to have the two S's next to each other. It looks weird.
Mm-hmm.
And so go there. You can check out more about that. Hopefully you'll show up there and attend with us. We will get this out to everybody. I'm sure John and Paul will probably maybe send you guys an email to say, hey, thanks a lot for attending. And if you want to engage with us, you certainly can. And thanks, guys. I really appreciate it. I think you were awesome today.
No, thank you so much for the opportunity. It was great. Thanks for all the great questions, and look forward to staying in touch.
Yeah, thanks, Jim, and thanks everybody for listening and asking these questions. We enjoy it, and we're happy to chat more.
One last question. Will ever you be at the MRCA conference? I will not.
Yes.
I will not. John and them will be there. We're coaching contractors right now. It's what we do. We do it all the time. And we've got a lot of them on our list right now. We've got some new products coming out for contractors. So we love you, Jim. Oh, thank you so much, Katie. That's nice. I just made my day. We're done. We're finished. Let's get out of here.
Great.
Hey, nice hat too, by the way. Appreciate that.
Yeah.
I got in trouble for giving that. I got in trouble for giving that hat to you, by the way.
You did.
The company that was there was like, "Where's my hat?" I was like, "All right." Hey, thanks everybody. We appreciate it.
Thanks everyone.
And we'll get this out to you as quickly as possible. Appreciate it.
Great. See ya. Bye.